Hey everyone, this is a trader and investor. In this video, I want to talk about avoiding frustration in the markets. Frustration if you're thinking about day trading. If you're thinking about swing trading, maybe not as much frustration, but in day trading, there are days that are very difficult to day trade. Difficult because if the asset you're trading is not moving significantly one way or another, and if it just keeps bouncing between a tight range, it's very difficult to find precise entries and exits unless you're taking huge risks or you're just gambling, right? And this is not what I want you to do. I'm not suggesting any kind of gambling because we're in the business of making money. This is a business and you have to treat it as a business. If you treat it as a hobby, do something else. Or just give me the money. Just don't throw it away. I say that jokingly, but it's very serious. If you're not treating this as a business, please stop trading. You have to treat this as a business. And in any business, you have to manage your risk. You know, you have some gains at times and you have some losses at times. That's the nature of any business. So you have to look at it from that perspective. So the last 3 days is where many traders could get frustrated. And here's why. We'll start with IWM. IWM gapped up on Monday, and then it had just a very tight range. The following day, similar kind of movement, very tight range. And then today, another tight range. What we normally like to see is on a day like Thursday, for example, when price collapses and then the following day, Friday, price continues to drive up. Price never goes inside the first 15-minute range on Friday because it wants to have a strong day up. But last few days, we didn't break out of the range early. And when we broke out, we stayed in a tight spot. Same thing as today. We break out, we still stayed in a tight spot because the markets are just not happy yet. Market not happy meaning market is in consolidation. And this is what will get many people upset about their positions. On days like this, it's okay not to trade. And if you do want to trade, think of it from a swing perspective and have those positions for swing trading, not for day trading. And then if we look at Qs, similar thing. The highs, as you can see, the 15-minute range high of all 3 days is the same. In the Qs. Qs were strongest yesterday or the day before, and then yesterday they started to be weak, right? Friday, Monday strong, Tuesday weak, Wednesday still more weakness. Diamonds were very weak Monday. That weakness kind of subsided, but we didn't make any new higher highs. We actually made this double top, equal highs here. And because we made this equal highs, this becomes an area of liquidity that the market can come after at a later time. And I'll remove previous liquidities that have already been manipulated. So this is an area that could potentially be manipulated at a later time. And as you can see, low, low, low. We keep making lower lows. We keep making lower highs, lower highs, lower highs. And so the markets overall, some weakness, some consolidation, as you can see in SPYs, in IWM, a lot of consolidation, in Qs, a little bit of weakness. So it's weakness and consolidation mixed. And when IWM wants to lead us, that's where we will see the takeoff. Once IWM decides I'm done with this consolidation, that will take off. And that consolidation comes after an accumulation area. So we've already have terminal shakeout. Yes, we've kind of tested those areas, and now what we're doing here is we're preparing for the next leg up. But we have to be patient and wait for that to happen. We have to really let the charts tell us what the charts want to do. And when we are in a consolidation of 3 days in a row of the 15-minute range being the same, you just know this is a very tight range. When you have this kind of difference, yes, that tells you, okay, this day was a strong day up, and then this day could not continue that strong day up, and today is a weakness from yesterday. Yes, we pushed up slightly, but we continue that downward pressure. That downward pressure because we know today's high is much lower than yesterday's high. So when we're making lower highs, this is not an area to jump in and say, oh wow, the 15 minutes broke, let me get in. No, please don't. Because you're seeing this going down in this direction. Right? For this to be confirmed that we're making a return back to the bullish trend, you have to see this kind of movement. So for now, that's a weakness. So very same thing in the diamonds. We're seeing lower highs and a lot of weakness. So in this weakness, don't be in a hurry to jump on the upside at the sign of, oh, this is a dip, let me buy. But what structure did we break to see this dip broken? By structure, I mean we have this high here, so I need to start seeing higher lows, and then really breaking out of this zone, this liquidity zone, after it does whatever it needs to do. It's going to give us one or two or three or four of these. After it does that, that's where we know that liquidity is taken care of. So until we see that, there's no structure that is broken. Right now, this is a high. So if we break this high, come back and test that high and start to fill this gap, you can play this area. You can play this area here, knowing that there's headwind and being prepared to step out of the way when we get to liquidity, or have extremely tight stops to move to the next level. But if this end of week or even end of day coming up to an area of liquidity, I always recommend just close your positions, be in cash, and repeat the next day, because the next day is going to give you another opportunity. There's nothing wrong to close here and wait for price to give you something like an entry like this here and continue that move up. So that's what the markets are doing overall. Don't get frustrated. It's the nature of the markets to at times breeze, at times consolidate. Consolidate means the market makers, the big institutions, are not deciding which way they want to take it yet. They probably know, they're just not telling us which way they want to take it yet. So we need to be patient and wait. It's okay not to trade. If you're trading 1 minute charts, I'm sure there are opportunities. I don't trade 1 minute charts. So this kind of charts is 15 minutes is the smallest amount of time frame I want to trade. And I don't see any setup yet for us to say, yep, it's time to go. So everyone be careful. And I said yesterday that we are going to see a gap and a runaway. Which way? I have no idea. But we're going to see a gap running away this way or a gap running away this way. One of those will happen, and when that happens, we participate. Until then, we wait patiently. You don't have to trade every day. You just need to be smart about the positions that you take, and you minimize your risk. All right, everyone, this is what I wanted to share today. Don't forget to like this video. I'm going to keep coming back to you with more of this analysis, and when we are set up to go on either side, I'll also make a video to alert you of what to expect. All right, everyone, take care.